Better US economic data and the Fed's hawkish stance pushed up the dollar index. Currency and Commodity Observer Lukman Leong said the GBP was still holding up, supported by inflation data that was higher than expected last week. He predicts that the GBP will still be able to survive better in terms of the inflation rate, but economic growth will still be very weak. Going forward, GBP movements will depend on US economic data. This week US GDP and PCE inflation data will be released. As for the Australian currency, Lukman also estimates that the AUD will continue to be pressured by the Chinese economy, which is still weaker than expected. He believes that this year global economic growth is expected to be lower than last year. Hence risky currencies like AUD will be avoided. Then JPY was also pressured by the BOJ's loose policy and negative interest rates. Even though JPY is the weakest, the BOJ will still continue to intervene so that the range is at 140 to 150, he added. Then Euro, although recently it has been supported by hawkish statements from ECB officials. However, a weaker economy and lower inflation from the US will continue to pressure the euro. Expectations for interest rate cuts will be higher, he told kontan.co.id, Wednesday, 24/1. With current data and developments, he sees that the US dollar will still strengthen against a number of other major world currencies. But not with CHF because it has safe haven status and more solid economic data, he continued. Lukman also estimates that euro at the end of the year will be at 1.0500, 1.2300 pounds sterling, 0.6100 Australian dollars and 0.8300 Swiss francs.